Hello and welcome to this Wednesday's morning market briefing. We've got lots to talk about, but firstly, the US sharply raises tariffs on Chinese EVs and semiconductor imports. As well as that, the Fed's chair, Jerome Powell, hints interest rates will stay high as the US inflation does linger. We've got lots to talk about on the charts also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is to do with the US and them raising tariffs on Chinese EVs. Now, ultimately, the Biden administration is now planning to sharply raise tariffs on Chinese imports. This move includes tariffs on electric vehicles, solar cells, and other goods. Now, this is of course a very interesting article coming off the back of what we spoke about yesterday, which was ultimately, providing us with a more positive note or a more optimistic outlook with regards to US and Chinese relations, which we do know, of course, is kind of at their all-time low. Definitely, US and Chinese relations have been worsened and have been worsening really since the beginning of the Trump era, and that's also worsened throughout the Biden administration as a result of Chinese power, both militarily and economic wise, starting to challenge the US's number one position in the world. And so the way the US has kind of responded to that with both Trump and Biden is by implementing tariffs, trade restrictions, building out a stronger military alliance within the South China Sea and the Pacific area as well. And all of this has created a great deal of hostilities, with this obviously kind of peaking back in 2022 when of course Nancy Pelosi did visit Taiwan, which did create a great deal of animosity from both sides to one another, with the Chinese kind of increasing their military activity around Taiwan and the Taiwanese Strait. And from that we've seen lack of communication really between US and Chinese officials, especially military officials, but also on the economic sense and just government sense. That said, over recent months, as we've noted on this channel, the US and Chinese officials have seemingly made some attempt to kind of amend this and kind of fix the issues which have formed with the lack of communication. We know, of course, in the most recent market briefing before this, we were talking about Xi Jinping and Joe Biden talking about the prospects of AI, the usefulness of it, how maybe the world should govern it, how the issues to do with it, and that kind of thing. So this was very positive on the business sense of communication between the two greatest powers of the world. So it was kind of creating this optimistic picture, and this is in addition to, of course, the increasing number of kind of trips that we're seeing from the US to China and China to the US, officials wise, to talk about different deals with trade and different issues within trade and looking to try and fix it. So most certainly over most recent months, we've seen this kind of attempt by both powers to kind of fix the issues to do with trade and try and come to some sort of agreement where these two powers are able to be in a competitive environment without hurting one another. Ultimately, though, this article, this topic, this new decision by the Biden administration to implement new tariffs on Chinese EVs completely kind of reverses some of that progress that we've seen form over recent months, and ultimately kind of slams the door shut on anyone that was kind of expecting the US and Chinese relations to be on a turn, as ultimately it does seem like the more recent visits and conferences held by both powers for one another's leaders, officials and CEOs is ultimately just kind of an attempt to tell investors or tell the wider public that we're working towards something where we're trying to improve relations. But in reality, on the ground, with regards to law and economic policy, it really doesn't seem like we're making progress. And what we're seeing here is once again the US implementing those kind of trade restrictions and protectionist policies, which are damaging US and Chinese relations. So most certainly this is a very important article to talk about, especially because also we've recently spoken at length about the Chinese EV market, which is ultimately taking the world by storm, and especially within the Chinese domestic market, which is now pushing Western car manufacturers such as Tesla, Toyota and others out of that market, because ultimately the Chinese are producing such quality cars at a lower price, and therefore beating any foreign competition. And so that's created a real issue for both, Tesla and Toyota and others, which had a significant share within the Chinese car EV market. And now they're kind of developing their own strategies to deal with that. And we know, of course, that the US was also worried about these kind of Chinese EV imports as a result of that, kind of posing a risk to US jobs and European jobs and that kind of thing. So it's no surprise now that we're really seeing this response from the US, with this all being in a new pre-election effort to protect US jobs. The White House stated that $18 billion worth of Chinese goods would be hit by the tariff increases. However, the industries targeted by the tariffs were specific to those damaging the US economy. Arguably the biggest move of all of them is the US quadrupling the tariff on Chinese EVs to 100% this year. In addition to that, the rate on imports of steel and aluminium will be tripled, and most importantly to modern developments, the rate on Chinese chips will be doubled from 2025, and the tariff on solar cells will also be doubled to reach a 50% tariff. Interestingly, the US imports of EVs is only 2% from China, so some may question the usefulness of such tariffs, but the White House says that such reasoning for the reasoning, for the tariffs is ultimately to prevent China from gaining a foothold in US markets. The key worry being noted by the White House's National Economic Advisor was that if such protectionist policies were not implemented, Biden's economic efforts and investments into jobs may fail as a result of being undercut by a flood of unfairly underpriced exports from China. Donald Trump, however, responded to such actions, saying that they are too little too late, which kind of hints towards the way Donald Trump may proceed with his economic policy and trade policies should he come into power. We know, of course, that he's the most likely candidate to currently come to power for the US at the moment. So, that's also something that I think is very interesting to note with regards to US trade policy and, US politics. So definitely keep your eyes on this topic and anything else related to US trade, of course. That's all to talk about in this article, though. Next article to talk about is about something that we're always talking about, it feels like, which of course is US inflation, US interest rates, and Jerome Powell, of course. Now, Jerome Powell has now said that the Fed is looking at keeping rates higher for longer than which had previously been expected. This comes in the face of strong and persistent US inflation, which most investors and the Fed as well had not expected. Now, this, of course, as I just said, is a topic that we're always covering, and most recently we've really seen a switch up in the Fed's monetary policy as a result of the way that US inflation has really changed. Now, for a quick summary, over the last 9 months, really, we've seen the situation with US inflation and therefore US interest rates change dramatically, with inflation back in October of last year, really being in a position which was worrying for the US economy, and the Fed was even looking at raising interest rates once more in 2023. Ultimately, though, we saw this change with US inflation starting to actually decline more than was previously expected. And so coming to the end of last year and start of this year, we really saw the Fed starting to approach the markets and their monetary policy with a very dovish outlook. And therefore, they were expecting 3 interest rate cuts this year, each at 0.25 percentage points. Markets instead, though, were expecting 6 to 7. So, very dovish pictures there from the markets and also from the Fed. What's changed, though, over the past few months, maybe 2 months or so, is that inflation has started to prove itself to be more persistent than previously expected, as well as that other economic indicators are showing that inflation is here to stay, and therefore the Fed has really pivoted away from their expectation of a great deal of interest rate cuts this year to one which now their markets are kind of expecting only 1 interest rate cut for this entire year, with the first being expected as early as September, which is far later than May or March or April that was expected at the start of the year. So a significant change has happened within the Fed's monetary policy, and this has affected markets and everything. And what we're hearing here from Jerome Powell is that interest rates are high and they're going to stay high for quite some time. So we are most certainly back in the era, or we've returned to the kind of rhetoric that we were hearing last September, last October, really. And this is a situation which is obviously negative for markets, as these higher interest rates affect the way that stock markets function, affect companies and their ability to kind of use capital markets to grow and everything like that, which plays into the US economy stagnating, as ultimately the reason why we're seeing inflation stay high is because the US economy has coped so well with these higher interest rates, unlike many economies around the world, and therefore inflation has remained persistent. So, the US is in a very interesting position at the moment, and it's interesting to hear from Jerome Powell, and it'll be interesting to see now how this rhetoric does affect markets for the rest of the week. And yesterday when Powell spoke, he said that the US economy had performed very well lately, but ultimately a lack of progress had been made in terms of bringing inflation down to that 2% target level. He did say, however, that he expects inflation to move down on a monthly basis to levels seen last year, but ultimately he wasn't confident in anything. A key thing he did note, though, was that Powell said that he expected the Fed to not raise rates anymore, despite the stubborn inflation presence. Economists and investment leaders interviewed by the FT have said that the Fed seems to be looking at their first rate cut to take place in September. Interestingly, markets reacted little to none with regards to Powell's comments. Ultimately, upcoming US economic data will be essential for any future analysis. So a very interesting time currently for US inflation and US interest rates, and it will be very, very interesting to see how future US economic data over this month and next month will then affect the market's perspective on how the US monetary, on how the Fed will form its monetary policy outlook. So definitely keep your eyes on any new US economic data, and definitely listen out for what most Fed officials are saying, as we are having two other Fed officials speak today. So listen out for that as well. That's all to talk about in the articles, though. Lots covered there. Next to talk about, of course, is the charts, where, like always, we are beginning with the US 30, talking about US indices as a whole, but we're not going to stick around for too long on the US 30, as ultimately not too much is happening today, or at least happened yesterday. Now, ultimately, as I've said since the start of this week, price has really been consolidating and stagnated at these previous highs that were made last week, as price was kind of pushing higher and higher last week, and made a great deal of gains, pushing through a great deal of liquidity and resistance, but ultimately has been halted near these previous all-time highs. So price did not make its way all the way to those levels, and instead has stopped and stagnated just before those key zones. So what price is now doing really is price is ranging around and is kind of in this period of consolidation as well, where price is reacting to these areas of support and resistance on lower time frames, but ultimately doesn't have any direction to the upside or downside. Interestingly, Powell's comments today haven't had much effect on the markets. We can see this small spike to the downside, but really that kind of is not that significant in comparison to some other moves that we see usually, and price has really stayed at the same levels that it's been the entire week. So we haven't seen much change despite Powell's comments. That's kind of because Powell really hasn't changed his comments, it changes rhetoric, so therefore there's no reason for markets to react, and interestingly, that spike to the downside was price reacting to that 50% Fibonacci retracement level, and coming back up, but had not made its way completely down to this key liquidity zone and Fibonacci retracement level. So price is in a very interesting area at the moment. And definitely you should keep your eyes on the US 30. The question is, of course, whether we are going to see any movement this week, as so far we haven't seen much. In terms of economic data that we're receiving today, we're receiving the US inflation rate figure, so that will have a high impact on the market, and most certainly the US 30 will be heavily impacted by that, as the US inflation figure does shape the way the markets do perceive the Fed's monetary policy. So depending on the figure that we do receive today, we could see price spike all the way to the upside and interact with this higher area of liquidity and Fibonacci extension level, or in fact we could see price swing to the downside, break even below this liquidity zone, and swing all the way down to this old area of liquidity. So lots to kind of think about for the US 30 today. And staying on the same topic of the US, we are of course talking about the dollar, which really has ranged just like the US 30 this week, and has remained within this key area of support and resistance, with price yesterday interacting with both levels within a short time frame. So most certainly those two areas are very key at the moment on these smaller time frames, and as I said with the US 30, today's inflation rate figure being released for the US will have such a great impact on the dollar, as of course this is the way that markets begin to perceive the Fed's monetary policy, and it's ultimately how the Fed perceives its own monetary policy. That key core inflation rate figure is always more important to understand the way the Fed shapes their kind of understanding of inflation, but of course that nominal inflation figure is also very important to listen out for as well. So lots to think about for the dollar today, just simply because we are receiving such an important inflation rate figure. Next to talk about though is Euro USD. So still on top of the dollar, where just like I said with the dollar, this will have the same, the Euro USD will also be greatly impacted by US inflation, of course. In addition to that, though, we are receiving the Eurozone GDP growth rate figure and industrial production figure, so that also will definitely play into the way that Euro USD does move today. So we've likely got a lot on the cards for Euro USD today, so lots to look out for. On the upside, we do have, of course, this higher area of liquidity, and on the downside, we do have this other area of liquidity, and in the middle, we have this area which price has just broken above. So keep your eyes on Euro USD. For pound yen, once again, price is just continuing this push to the upside, this kind of slow but stable push to the upside, with price making it quite near now to these very recent all-time highs, which was seen during this extreme period of volatility, which has kind of broken the market. But ultimately, price is making its way up to those levels once again, and it'll be interesting to see how markets do react to this level, which is kind of the most recent regional high, which price is currently interacting with. So keep your eyes on pound yen. As for Bitcoin, the Jerome Powell's rhetoric today has kind of pushed Bitcoin to the downside somewhat, you could say, as ultimately less demand for Bitcoin is there when investors know that they can put their money safely into the dollar. So ultimately not much is happening for Bitcoin. That said, price is still above that $60,000 a Bitcoin level, which is so significant, of course, as marking that kind of baseline for Bitcoin's price. So definitely keep your eyes on Bitcoin. Gold will also be greatly impacted today by that US inflation figure. Interestingly, price has now reacted to that 61.80 that we did mark out, I believe yesterday or the day before. So price has reacted with that and is on the upswing now. So depending on the US inflation figure we do receive today, price could most certainly make its way up to that 27.20 Fibonacci extension level, which lines up with that key liquidity zone on the upside. So keep your eyes on gold. Lastly to talk about though is oil. Not too much to say on oil. Price is still kind of consolidating and stagnating around this bottom for price. So keep your eyes on oil though nonetheless, as the Middle East news and conflict is affecting oil's price greatly. That's all to talk about on the charts though. Lastly to talk about, of course, is the economic calendar, where, as I've just hinted to throughout the entire briefing, we're receiving a great deal of data today, and all of this is very important. So firstly, we are receiving both the French inflation rate figure as well as the Eurozone GDP growth rate figure. So two very important figures which will be affecting the euro, especially as that will be affecting the ECB's monetary policy outlook. In addition to that, we're also receiving the Eurozone industrial production figure, so not as important but still related to the euro Eurozone and across the pond now, we are receiving an extremely important figure, that being, of course, the US inflation rate figure. That core inflation rate figure is, of course, more important to listen out for. And we are forecasting a 0.2% decline in core inflation, headline figure. So that will be very interesting to see whether that comes true and where that inflation rate figure does come in, as ultimately that article that we spoke about, the second article that we spoke about the Fed's monetary policy, it will be greatly impacted by any inflation rate figures. In addition to that, we're also receiving the US retail sales figure, which of course plays into inflation as well, followed up by the US business inventories figure and 2 Fed official speeches. That's all to talk about though on the economic calendar. We've got lots in the articles, lots in the charts, and lots in the economic calendar. You have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.